So to finish out the videos today, I'd like to talk about numbers 5, 6, and 10. In number 5, we're told that Melissa wants to check the accuracy of the finance charge on her promissory note. So remember, a promissory note is another name for a loan. She has a $6,000 4-year loan at an APR of 10%. So we need three things. We need, first off, her monthly payment. Now, we can use a formula again, but we can also use this table from the worksheet that we had prepared for us last week. She's borrowing money at 10% interest for a length of 4 years. So for each $1,000 that she borrows, she owes $25.36. Since she's borrowing $6,000, we have to multiply those two numbers together. And we see that we owe $152.16 per month. Melissa owes that per month to pay off her loan in 4 years. Now, if she does pay this loan on time each month for the 4 years in total, she pays this $152.16 for 12 months every year for a total of 4 years. So by multiplying these together, we'll find out exactly what she's paid overall. So on this $6,000 loan that she took out, she's actually repaying $7,303.68. We can calculate the finance charge, or the interest that she owes, by simply subtracting the total payment, or the balance of the loan, minus the principal. So if you think way back to our rules from last quarter, interest is equal to the total balance minus the principal. So in this case, the interest or finance charge, you can call this finance charge or interest, is equal to the balance of 7303.68 minus 6,000, and it looks like her finance charge is a total of $1,303.68. So she's paying that much extra because she was unable to save and pay cash for whatever she tried purchasing or whatever she needed to purchase. Example number 6 is a good one for us to pay attention to. Ron did not pay his credit card bill in full last month. Now that doesn't mean that he's penalized or anything for that. He just has to have an extra finance charge assigned to his account because he didn't pay it off completely. He wants to pay it in full this month, but on this month's credit card bill there's a mistake in the average daily balance. The average daily balance is used to compute our finance charges. So the credit card company lists the ADB on his bill as $510.50, but Ron computed it and found that it was actually $410.50. So in Part A, we're told that the APR, or the annual percentage rate, is 18%. And so we'd like to know what the finance charge that the credit card company computed, and then in Part B we'll find out what the actual finance charge would be based on the correct dollar amount. So the thing we have to remember is that whatever our average daily balance is, we multiply that by the monthly or the periodic rate, And so while the APR, the annual rate, was 18%, we have to divide that by 12 in order to get our periodic rate, or the monthly rate. We can do this all at once, or straight across the row if we're using a calculator that doesn't allow fractions. So I'm going to write 0.18 for 18%, and then I'll divide that by 12 immediately. This is perfectly fine. This is an acceptable way to complete this calculation. So if the credit card company was right and he did owe $510.50 multiplied by 0.18 for 18% and divide that result by 12 for the periodic rate, then the credit card company is likely to going to charge him $7.66 in finance charges. $7.66. But in actuality, the correct number, according to Ron, was that his average daily balance was only $410.50. So we'll multiply that number by 18% and divide that by 12 for the periodic rate. And we see that $410.50 times 18% divided by 12 is really only $6.16. For a difference of $1.50. Now you may feel like you're splitting hairs at this point. What's the difference between $7.66 and $6.16? What's $1.50 that goes to the finance charge? Well, if you're counting your pennies, if you're really worried about how much you're spending and getting yourself out of debt, then every penny counts, and it's worthwhile to double check these calculations. So the last example that I want to talk about here is number 10, because I had some students that were not quite sure of the correct final answer for this one yesterday. Janine's credit card was stolen, and a thief charged $44 before she reported it stolen. And the question becomes, how much of this is Janine's responsibility for paying? And the answer to this is all of it, $44. Notice that this was charged before she reported it stolen. So maybe she knew it was stolen and just didn't report it in time, or maybe she didn't know it was stolen. But we're responsible in this case for paying up to $50 in charges. Now, in this case, this thief didn't spend over 50, so we're on the hook for all $44 that were charged. But if this thief had put $300 on the card, we still would have had to pay just $50. Had she reported this card stolen immediately, if she noticed that it was missing and reported it right away before this meal was charged, then she would have owed $0. So the thief may have used it, but if she reported it before it was used, then she would be responsible for paying none of it. So I hope these videos helped. Please make sure that you come to class on Monday with some questions if you're not sure how any of these were completed or how we work on the practice problems from today.